On the weekly chart, we're going to take a look at TLT in here. That is going to be the ETF of your bonds. We ended the day down here, 88.70, down about 36 basis points or so. Now, there's one kind of sweeping rule that we kind of always follow. This is for if you're new to the market, you're new to options trading, things like that. There's kind of one overarching theme to the whole markets and how they correlate in your divergence, convergence, arbitrage, things like that. And that is when the overall market rises, you're always going to have a pullback or an inverse correlation with your bonds and your VIX. That 90% of the time, that is what's going to happen. Now, if one of those things does not happen, then you always have to question what is happening. What are the market makers seeing? What are the options traders seeing in this underlying and the overall market? What is happening, right? And we had an odd move in here today because you had that sharp basically a big run up in here in your overall market. So your spiders about 661 to about 667 almost, even though if you look at the quotes, it's about three handles up. And you had a little pullback in your bonds, but you had that sharp kind of recovery about midday. And then your VIX basically stayed flat. So what does that mean? Why is there so much volatility still staying in here when we did have that big run up overall in the market? So the question is, are we setting ourselves up to kind of price in a nice pullback in here in the overall markets, right? Do we have to go up and hit 670 first, then we get a pullback or 668? What's happening? Are we going to get a huge push in here in the bonds overall? That is kind of the question that we're looking at. We're not calling anything really, but what we have to be aware of is that something isn't out or something happened out of the norm today, right? And that's what basically you had a flat VIX and instead of a down VIX, and you had a TLT that basically had a sharp recovery midday, and then you had a overall market that just kind of kept on climbing higher. If not, it went even higher than it normally would when you have a flat VIX, right? So that is kind of what happened in here overall in the markets today. How does that relate to TLT and what are we seeing in here? Well, 88.69, that is going to be the level that we're going to need to hold as we open tomorrow, or we're going to gap up or down. That's going to be the question. If we're gapping down, then that 9-day EMA at 88 flat, that's what we're looking at. Anything below there, we're going to be down here at that 86.90. Now, if we do hold to 88.69, then we're looking for a pop in here, and we're just going to chalk it up to that $90 range, 91, and then 92. Nice whole numbers working our way up, but we're going to have to get a pretty big down move in the overall markets to get a nice pop in our TLT. So that is kind of what we're looking at here. We're not prepping for that, right? We're not prepping for a huge spike in our VIX, a huge spike in the TLTs while we get that overall pullback in the markets. We're just saying that something was out of the norm in here today. We still had a flat VIX with the market just shooting right up, and that could be due that to that the market just shot up too quickly, right? So it could be as simple as that, but we do kind of have to keep that in mind as we're looking at these and how it all correlates to the market and how our spies are, or how our stocks, I guess, are beta weighted against the SPY, and seeing how that's going to affect our commons and our different stocks that we have different positions on, etc. So overall, what does that mean? Nothing really as far as we should be concerned, but it looks like that everybody is kind of starting to hedge in here, and that if we could get up to about the 668s, 670s, that a large healthy pullback could happen first before we climb higher. That is kind of what everybody is basically prepping up in here. And if your TLT does hold the 88.69, then we could get a little bit of a pop in here and a run up back to those 89s and perhaps 90s. That's what it's looking like. Obviously, things can change. We'll let the net flow and things like that dictate how we react to all of this in the markets as we go forward. But overall, nice move in here. Overall in the markets, great. VIX staying flat. That's what we want as options traders, right? We don't want the VIX to go low. We want volatility to be pumped in all of our options, call and put side, right? So it's actually a good thing that the VIX stayed flat in here. But we kind of have to be aware of how those things affect the overall markets. So again, on the TLT, again, 88.69 is what we're looking at for a nice hold. If we do get a pullback in the overall markets, we might get a little pop in here to TLT, 89 to 90. If we continue to climb higher in our spiders, and if the VIX starts coming down fiercely, and as we climb higher, then the TLT will probably follow the VIX more than it will the spiders, right? And then you'll get a sharper pullback in here, and then that's when we end up breaching that 9-day EMA, and then working ourselves down to that 86.90. So that's kind of how everything more or less correlates overall. Hopefully that was helpful to you guys, but we'll see how our bonds relate to the overall markets tomorrow and how that is going to affect us trading going in throughout the week. So we'll see what happens overall in TLT. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you are interested, and you can find all of our socials in the description below.